Bitcoin is pumping and you need to be careful. This could either be the run to $140,000 or $150,000 because honestly, the aggression and speed of this pump is good, or it could be a trap. And in this video, I'm going to explain why. Because looking at the chart right now, this looks really good. But when you look at the news, that looks really bad. So drop a like on the video, subscribe to the channel, turn on those channel notifications so you get notified as soon as I post a video, and leave a comment whether you're bullish or bearish in the comment section below. Because it's time to decipher what is going on with crypto right now, because that bounce there was pretty insane. If we measure it, look at that. It's been a 7% bounce in the past couple of days. That's just on Bitcoin. If we're looking at Ethereum here, again, another very, very aggressive bounce to the upside, measuring about 12%. And for Solana, it's been even crazier than that, if I'm not mistaken. Oh, yeah, 15% bounce. These are all very aggressive bounces, but when you're looking at these charts here, I mean, these are old setups that I've had for a while, and to me, I don't know. I don't like the look of that. The aggressive bounce to the upside to me kind of looks like a retest of a previous level of support that has now turned into resistance, and we need to crack it, of course. So the thing is, you don't want to jump into a long position on Ethereum here at $4,500. You don't want to jump into a Solana long position at $230. And with Bitcoin, I mean, I'm going to delete some of this mess before we go into analyzing it, but you don't want to just jump into a random trade. We do have some pretty consistent levels of resistance, and currently, yeah, we're cracking one of them, but it's just these levels that we're coming up to are pretty strong levels, and it's not often you see a trading formation that just comes all the way up, cracks the resistance, and just starts pumping even more. Like, the odds of something like that happen are so incredibly small. And one tool that you can use to measure how far we are in a drop right now is you take the Fibonacci tool, you plot it from the bottom of the trading range, plot it at the top of the trading range, and measure the drop down. Now, we completed a 0.618 retest, and we're now back at the 0.382 level, which is normally a level that you get to when you have what's called a dead cat bounce. And a dead cat bounce is where, of course, you drop a cat and then it bounces a little bit, and then of course gravity takes it back down. And that's why I say, I don't like to say this, but it could be a trap in that we go upwards, we go downwards, we go upwards, we go downwards, we go downwards, we go upwards, and then we maybe come back all the way down and reset fully to that level before completing the trading formation. Because you've got to understand, are we actually making like a pattern which would look more like this? Are we just going off Ethereum right now, but are we making a pattern that looks more like this and we're flagging outwards, or are we just going to keep pumping to the moon here? What kind of pattern are we actually making? Now, that becomes a pretty easy case to make if we delete all of this nonsense off the charts and we come over to this fresh chart here where we can see, again, this is the daily chart for Ethereum. And the reason I pick Ethereum for this is because I think it has enough amplification in its price, meaning that it moves slightly more than what Bitcoin moves, which create these market structures that then we can analyze. There's not enough data, I don't think, on Bitcoin, and you can take the same data from Ethereum, from Solana. If one of them's looking bullish, generally all of them look bullish, because you got to remember, Bitcoin is the market driver. If Bitcoin goes up, everything goes up by a factor of whatever, but generally more than what Bitcoin does. So when it comes to the market structure right now for Ethereum, if we're looking at this, we could plot out some kind of flag pattern, and the question is, I mean, that looks pretty realistic in terms of the ranges that we're in, as does this, which is a chart from a previous day's video. And what you'll notice is on this chart, there's two big green lines going across the screen, and if we zoom out, what do those big green lines mean? Well, one is the long term of support. Now, we've actually tested both of them. This is the bear market of 2021. This is like several little bull markets that we've had between now and then, and this is ultimately the big pump that we've been having recently. Now, within that big pump the other day, we actually came down, we retested the outside of the old previous range by breaking below the old previous support level, and now we've bounced back above. And I do see a lot of confidence in the markets right now, and I'm very hopeful that this works out. I just don't have a huge amount of confidence entering a long position or a short position at these levels, if I'm honest. And when it comes to Bitcoin, we need this daily close above this level of resistance here. It's pretty simple. Bitcoin needs a really good day, and it needs to maintain trading above $16,000 all day until the end of the day. And if it can do that, we're gonna get a probably significant pump over the next few days that takes us all the way up to this level of resistance up here at 126. And that's why I say, like, it's make or break time. We're in the middle of a range. You can see that typically when we break these levels, we come up and we test the top, break the level, come up and test the top of the next range before getting rejected. And now we've broken another level. Of course, I have mild concerns because this is very aggressive as far as pumps go on something like Bitcoin. Be up 7% in a matter of 3 days is a very aggressive pump, especially on the news that we've had at the moment. So to get a clear view on the market, I first of all want to show you why this is happening. It's happening because this was the information that we had from the Fed the other day, with a 10% chance of no rate cut and an 89% chance of a 0.25% rate cut. Whereas with this page refreshed today, you can see there's now a 99% option, and that 99% option is a 0.25% rate cut, and the 1% option here is a 0.5% rate rate cut. And what that means is we're probably, we're 100% we're getting a rate cut. The next FOMC meeting will have rate cuts and it will be glorious. The problem that I have is it's not for 28 days time. And in this industry, we are so prone to getting ahead of ourselves. And that means when we're presented with small changes in information like this, the market completely overreacts to it. Now, this all happened today because more jobs data was released and it showed an increase in unemployment. And in order to ease that unemployment, the government will have to cut interest rates even further to encourage more economic growth from more spending. But it only takes one lot of jobs numbers to turn that around, and we seem to get 3 a week at this point in time. And when it comes to what's going on in the US, which is by far the most important country for crypto, the US begins government shutdown with Trump and Democrats at an impasse. It's going to affect a lot of different agencies. Like the federal courts will remain open, but medical research will be partially closed. Small business loans are going to get mostly closed, which means there's less access to capital for small businesses. Visitor centers and parks and monuments are going to be mostly closed. Economic data and collections and reports, again, mostly closed, which means that we're going to have inaccurate data at the next meeting. For the most part, a government shutdown doesn't change anything, but the key one here is the economic data collection and reports is going to close down. If you ask me, I get the feeling that Trump wants us another trip to Scotland to go play some golf. Because all this is happening at the same time that US firms have shed 32,000 jobs in ADP report after a data adjustment today. The stupid thing about this is it already happened months ago and it's just a data adjustment. Now the question is, where are these job losses coming from? Well, a lot of it's coming from the financial sector because of huge amounts of automation in finance. And this whole situation gets even more interesting because Trump dropped the visa program in the USA from costing $5 million to $1 million for a golden visa. Now you'll know that recently we've been talking about visas on the channel, where you can live, where is best for taxes, looking for the best taxes. America's not the best for taxes. You're going to get 20% for your whole life, but it's also not the worst for taxes, and you can go and get this visa and then go live in Puerto Rico. And in Puerto Rico, you have zero taxes. So there you go, another option. So how does all of this translate into Bitcoin? Well, right now, Bitcoin is absolutely ripping. It's now at $17,200 and seemingly just going up in a straight line, which of course is incredibly bullish because the same is now being replicated by Solana right here. It's just starting its pump, probably going to continue. The market looks insanely bullish right now. What can I say? It just looks like straight lining to the moon, which is also a big sign of caution and a big sign. Probably don't jump into just a random big pump. I definitely advocate for caution in this market right now for sure. That being said, if you do have some pretty big balls, it might be a pretty good short position to take. And of course, if you're interested, like I genuinely actually think that, because I think it'll come down to about $15,900 again, about $1,000 drop off before it continues, maybe to the upside, maybe to the downside. But to be honest, past few days we've been wicking out quite a lot of these big levels of resistance here on the liquidation heat map, and we've been building up a range lower down here, back down around $110,000. Don't forget, we are building an absolute monster of a CME gap down at $110,000. And although a CME gap really is complete like hieroglyphics or star signs for men, it does happen and we do close them. I don't think this is the pump. I think there will probably be another iteration of this. We'll find out if I'm wrong or not pretty quick. But of course, if you are interested in trading, do check out BLOFIN, who have kindly given me the opportunity to let you earn yourself a watch that's worth $10,000. All you got to do, click the link in the video description and use BLOFIN as your main exchange. It's literally these days where I do the bulk of my trading. And also, we're doing another $10,000 to $1 million trading challenge, so get involved in that. It's already started. We've not placed a trade yet, but if you want to join it, sign up to Crypto Saving Expert. You'll find a link in the video description. You'll also find a 50% off code. Or is it 50%? I can't remember what the code is, but there's a discount code down there. It might be 40%. But either way, check it out. You'll find the links in the video description. Lots of good stuff in there. But on that note, guys, I have got to get back to trading these markets and picking out some trades for the trading challenge, because it's going to be a pretty good time to pick some. So let me know. Bullish, bearish, comment section below, and I'll see you in the next video.